Okay, what is up? Good morning, everyone, and thank you for attending on your beautiful Sunday morning. So we're gonna get right into it. Regardless of skill level, one of the absolute best ways to progress, regardless of whether you're a beginner, whether you're advanced, in my view, the highest ROI is always studying charts in depth and going into really, really detailed nuances of what makes a chart better than the other and your biases, especially for the week ahead. And so if you don't know me, I'm Lance Breitstein. I was one of the top traders at Trillium. I was an 8-figure trader, meaning I made over $10 million in P&L per year for multiple years. Now I still trade and I mentor other traders, and I am here to help guide your Sunday session to be as productive as possible. And so, as I like to say, for almost 10 years, I was going into the office on Sundays to at least do an hour or two of really, really focused studying. And so I'm gonna do that with you all. And before I really dive into it, I must start with, sadly, all the disclaimers. So this is not investment or trading advice. These are not recommendations to buy or sell. All of this is purely theoretical. This is just education and thought-provoking, sharing my views. So anything I say today does not reflect anything you should do. Do not trade based on my advice. Learn on your own. Investing and trading entails risk. So I am not responsible. That is true if you lose money, if you get injured, or if you get attacked by a flock of pelicans. I am not responsible. So please make your own investment and trading decisions. This is simply to educate you all and share my thought process on some of these top charts. So we're going to be exclusively looking at in-play tickers. What is an in-play ticker? An in-play ticker is something that is having an exceptional trading range and also trading on higher volume, often due to fresh breaking news or due to the fact that it's got an awesome technical pattern. So it's not trading stuff that's boring and barely moving 5 cents. In my opinion, most of the market is efficient. So you need to find the tickers that are moving very much so not with the market, and they're doing crazy exceptional moves. So everything we look at today will be through that lens. That is also what I call the broken slot machine, meaning you are able to actually beat the casino and have greater than zero expectancy. So we're going to dive in now with what I think has been one of the most interesting tickers, and that's this OKLO. So OKLO is one of those nuclear stocks. And so this stock, so I guess to even take a step back, I always look really long-term first. So this is, a monthly chart. I'm looking at yearly. I sometimes even go further back. And so all of that is going to give me the broader context. So this stock, obviously, over in the course of a year now, has exploded. We are up over 10x. That is the whole push towards nuclear and needing more energy to fuel all those AI data centers and all that compute. So, okay, most recently, this stock broke out from about 85 bucks. And so this was an incredible swing long. And so I spoke about last week in a tweet the importance of market context. Right now, this market has been exceptionally hot. The market is at all-time highs. There's this kernel of truth that AI is going to massively change productivity in the world, and that things are going to just pop off with improved efficiencies. And so a lot of the stocks, whether it's Oracle, whether it's the NBIS, which I'll also probably get to, whether it's quantum computing, whether it's nuclear, this is the future of where the world is going. The world will be dominated by AI, and you need to be in these stocks regardless of price. And so if I dissect this OKLO chart, yes, we've made a really big move from even mid-year, 20 bucks up to 80. But then despite that, this to me was a really beautiful consolidation here. And so what I really want to do in these sessions is go deep into those nuances. And so what I like to see is if we make a leg, right? So this was kind of a leg, we consolidate, we make almost a second leg. Now we've consolidated almost all of August. That's a lot of price acceptance. That's what consolidation is. And so these leaders, especially when the market is at all-time highs, these can break out and really go. In fact, if you follow people like Christian Qualamaggi or some of these other momentum traders, actually they make the most money in like the 7th inning, 8th inning of a bull market, because that's when stocks can really, really blow off, and that's what we're getting. So the place to be long biased, in my opinion, you want to be long biased down here at $85. We get this beautiful breakout bar, and we get some really solid volume confirmation. Nothing super crazy, but it is increased versus otherwise. And then we get some consolidation bars, and we make this beautiful leg higher, pretty much holding, I think we, let's see, do we hold, I mean, we just barely break prior bar lows, but not even so meaningfully, and we pretty much make this massive leg. So for people that follow me, they know that in trending tickers, my default assumption is I'm going to just give it to break of prior bar lows. So this pretty much, yeah, it's maybe a very minor wick there, but we pretty much hold this whole leg with prior bar lows until this day. And sure enough, this ended up being an offering, so we gapped down, but that was the change of momentum. And so what's interesting is this day was extreme price expansion, right? We ended up going over 20% in a single day. And what we end up doing is even the next day, we try and fail and we don't. So this has shown extreme strength until this day, 9-24, when we broke trend. So for me now, especially following this news of that offering, right now we're in what I call no man's land here. So if I take a step back, the breakout level was 85 bucks. We had this epic, incredible leg where we almost went up 100%. I mean, that's probably like an 80% move. And so where I want to be long is down here. As this starts to go, this is a chase. Your expected value is decreasing as the stock moves higher and higher. So if anything, as the stock really goes, especially on big days like this, in theory, I want to be reducing my size. And then for me, that break of trend, really kind of comes on this day. Now we get the news offering. And so now the reason why I think, at least for me, we're in this area called no man's land is because this is the middle of the range, right? This is the high end of the range. Anything 130 to 145, I'd consider the high end of the range. Anything 130 to maybe $100, I'd consider mid-range. And the breakout, the low range where we came from is 85. So I find, just based on my trading data, anything mid-range like this, I tend to have very, very break-even or worse success levels. So for the most part, I might be interested, depending how the chart sets up. My views change every single day. My views change every single minute. But depending on how this sets up, I'm interested in a potential long in the low range or a potential reshort against those highs of 145, again, depending how we set up. For me to want to be long something like this again, this would need to really consolidate and set up. Again, consolidation is price acceptance. This has made a really, really, really big move. And actually, this has made the largest, sharpest move it's made pretty much in the whole year or multiple years. So especially where we are in the overall market context, which I would say is maybe a 7 or 8 out of 10 in bullishness. I do think longs need to start to be cautious overall, given where the market's at. And so given that this was the sharpest leg, overall, right now we're in no man's land. I need to see this consolidate, and I need this to, give time. And otherwise, I'm going to be hands off. And that's okay. And that doesn't mean there won't be headlines. That doesn't mean I can't get, sucked in if this sets up really nice. But for now, right, based on this Sunday going into essentially September 29th, this for me is just no man's land. Like if I want to be short, we've now pulled back kind of too much. The moving average is 15 points away, but then again, any stop is kind of far away as well. My big picture stop's really far away. So OKLO is definitely no man's land for me. So another really fun ticker that has been very in play has been this open. So Qualamagi has talked about this, but pretty much every euphoric cycle tends to have a sector or stock that really goes nuts. We've seen it in the weed stocks before. We've seen it in the 3D printing stocks. And so when I say these examples of sectors and tickers, this is something where it's like, if you're a really good student, you want to find all the charts that are analogous to some of these. And so what you want to do is you can use ChatGPT or you can use Google and you can say, hey, ChatGPT, hey, yo, chat, yo, brother, what's the best, what's Lance talking about with these super hot, euphoric 3D printing names? When were 3D printing stocks super hot? What were some of the tickers? Or ask Google or ChatGPT, when were the weed stocks really, really hot? And you can pull up the charts and go back and look at the crazy Tilray saga. You can look at the Triple D crazy saga and study and document all those charts. And by doing that, that is how you build playbooks that you can reference over time. Additionally, if you're looking for really good breakouts of stuff like this OKLO, the most recent and probably the craziest, most euphoric period I've ever seen and personally traded, because I was too young for the dot-com bubble, was 2021. And in 2021, you can find so many crazy setups like this, amazing breakouts that just kept on going and going and going. That is where traders like Christian Qualamaggi will epic crush this stuff, because it's so asymmetric. Now keep in mind, like I tweeted about, when the market is hot like this, it increases your potential reward. It increases your win rate because you get so many other people buying and doing follow through. And so the people that follow my content know that expected value drives everything. And when your win rate goes up, when your reward goes up, guess what? Your expected value is going up. Therefore, you want to be more aggressive overall. You generally want to be increasing your size. And that's when these swing traders really crush it for that reason. So you can find a lot of comparables. And like I was saying, every sector has its hot stock, or not every sector, but every cycle has its hot stock. GME and AMC were the meme stocks of 2021. If you asked me what the meme stock of 2025 is, it's clearly open door. So look, I have negative views on what Eric Jackson, the dude who's pumping this, is doing. I think he knows what he's doing is bullshit. I think he knows his fundamental analysis is bullshit. I think it's clear he's a total fraud. When he says, oh, he caught these 100-baggers, he has never caught a single 100-bagger. All that means is at some point he bought Carvana, at some point he bought stocks like Alibaba. Well, guess what? If I had to tell you how many stocks I've bought that have gone up and traded in my day, I've traded probably like 80% of tickers in existence. Like I traded Bitcoin back in 2011. Does that mean that I caught the whole move? Hell no. It's totally fraudulent to even act and infer that you did. In my mind, he's bullshit. That being said, I can separate and need to separate my views of him, my views of this stock fundamentally. I think this stock is bullshit, but that doesn't matter, right? Because I'm a trader. I'm not an analyst. I'm not a person that trades his biases. What I do trade is the chart, and this ticker has been the kind of in-play meme stock of the saga. So we started at 50 cents. This was the original Eric Jackson pump. I did quite well shorting this euphoric day, where this was the big capitulation blow-off. We did some crazy percent of the overall market. This lower high was extremely opportunistic to short, but then guess what? Over time, we end up reclaiming. And so a lot of these breakouts have not been super clean unless you're giving it a loose stop. So some of these breakouts, you can play with the stop of the moving average. I tend to not be so great capturing a lot of these. This for me, I probably wouldn't have captured too much, I'll be honest. And then even, this big gap up, this happened on news. So this makes this stuff a little bit tough to catch. And so where are we now? We tried to break out again above, this high here, and we failed. We failed, and then we start to really get crushed and sell off. But what's so interesting, and that's often how a lot of these meme stocks can trade sometimes, is even when it looks, oh my God, we're done for, these can really reclaim. Like I was shocked. It looked like, oh my God, after earnings, we were done, sub $2. We end up reclaiming, and this day was a really strong reclaim. So once we had this bar here, I was like, oh wow, like maybe this saga isn't done yet. Because I expected this to mostly just drift off into the sunset, and we didn't do that. And so this is also an example of how my views really are so dynamic, right? I can think, oh my God, this stock is done for. Then a bar like this can change my mind. Certainly, once you have this bar and you're right back at those highs, those capitulatory highs, you got to say, oh my God, this story might not be over. And even now, we roll over and we reclaim. So for me right now, this ticker is one you can't really write off. There's so many times where you write this off and you think it's dead, or you might get too short biased and feel too strongly that, oh my God, this is going to be an easy short. This is going back to $1. Well, guess what? This is, in my opinion, not going back to $1 anytime soon. Even sub $2 is going to take a lot of time because there's just so much attention and eyes on this. And we are in one of those frothy, strong markets. And I don't think we're in overtime. I don't think we're in extra innings. I think we're in the 7th inning, right? And again, the 8th inning, 9th inning can go extra innings. You can get a lot of extra innings, and bull markets can really, really do some stupid things, especially when you're fueled by this pervasive thought that AI is going to change everything. So, like I said, right now, kind of like OKLO and a lot of the high-flying stuff, we are kind of in no man's land for me, right? So what I would want to see, and I think it's so important to do this, anytime you type up a chart, you want to do the quick assessment, like, okay, what does it look like big picture? But then what does this need to do for it to get me back involved? And what I'd really, really want to see is a very long consolidation. I'd want to see us start to hold up in kind of the upper quartile of this range. So I want to see us holding up and consolidating around 10 to 11 for me to be long biased. And I'd want this to have, I don't know, at least a week or two of consolidation. The more consolidation you get, the more kind of volume turnover you get, and the more people that accept the price. So then when you break out of that range, it can really get a lot of new participants involved. It can get a lot of people. Like if you're someone that sold somewhere in here, then we consolidate for a couple weeks, you're willing to rebuy $11, more so than when we haven't consolidated a ton and we break on bars like this 917. So things I'm going to want to see is kind of a multi-week consolidation holding above ideally $10. For me to be short biased, I would want us to start to make this a lower high. So that this is the kind of higher high, this is the low, this is the lower high. Then I'd want to see this kind of consolidate down by 7 and start to break down. Other things I'd be watching are some of the other sectors. I kind of view open as the leader, so that makes it a little tough. Like this is kind of one of my main indicators of sentiment and kind of the stocks with no great business that are just ripping. So that's one thing I'm going to pay attention to. Now, the other sector I really want to dive into quite a bit is going to be the quantum names. So the quantum sector has been an incredible one. So pretty much since last year, and I'm going to expand out a little bit. So these stocks came from nothing. These quantum computing stocks, essentially, they're trying to be the next wave of computing that can crack all these advances that we otherwise would not be able to. And there's been some advancements. It's still very far off. I think Jensen Huang, the CEO of NVIDIA, had said he thinks it's even still 5 to 10 plus years off where these are meaningfully adapted. And right now they don't really have any revenues, so they're kind of largely just going up on vibes and incremental improvements. This is the type of stuff that only happens in very bullish markets. In very bullish markets, people suspend their beliefs about the need for cash flows. They suspend their beliefs about what may or may not happen in the future. And overall, they take a very rosy, optimistic view. Oh, of course, quantum computing will lead to progress. Of course, it will be sooner rather than later. And of course, these companies will be the ones that capture those cash flows. And so these stocks have consolidated. And again, another sign is once we rolled over, especially back through here, I thought these quantum computing names, which is, IonQ, RGTI, the Qubit, the QBTS, this whole sector I thought was going to be absolutely done. Then we start to trickle up, and this bar, again, needs to be your holy shit bar. We are back. So what ends up happening is this consolidation here is beautiful. If you want to study amazing breakout charts, this IonQ is absolutely textbook. This $50 breakout is one you need to study. So if you're a long bias swing trader, this $50 breakout breaks you out of this range after an amazing consolidation. Multi-month consolidation, big picture where highs. Where can you add? You can add on the break of 55 at all-time highs, and look how well this trends. Again, I discussed how my default stop is prior bar lows. This absolutely crushes it. that trend breaks, you can then flip. And notice how similarly this trend shifted also with OKLO. Again, these stocks are not remotely related. OKLO has nothing to do with IONQ, but all of these stocks were moving in this kind of momentum basket, right? Even even the market, right, had been super strong during that. We had started to pull back a little. So this IONQ, again, the place to be long, right? The place to be long is $50. The place to be long is $55. Anything above there then starts to become a chase. This $75, you cannot be longing this thing up here. You cannot be longing this thing at 65 or 70. Your expected value just becomes so poor because we have gone too far and we have gone really fast, And so like, even with some of this stuff, this volume this day really, really picks up. On any breakout, you want to see a breakout that really gets a lot of attention, that gets a lot of new eyes. You want to see all the shorts, like, okay, we made this big move. We're still within the big picture range. And so what ends up happening is a lot of people say, oh, I'm going to short here. I'm going to short here. I'm going to short here. Then this break is a confirmation. So you get all these shorts that add during this consolidation period. You get all these longs that say, oh, wow. Oh, my God. I bag held it at 17. We're back at 45. I'm going to sell because I can rebuy against the highs. So you get all these people that are selling and turning over shares or thinking we're going to roll over. Then all of a sudden, this consolidation is really, really nice here. And this bar is almost the tell, right? And so these are the nuances I want to look at. And I think this is something Koala Maggie does so phenomenally well. He's really stalking these tickers like a hawk. And we get this tight consolidation period. This day really perks up, right? We get a nice inside consolidation. This is another day where this bar, I'm already watching it all through here. And even when I see this bar on 9/11, I'm immediately thinking, oh my God, like we are probably going to rip through these highs. Everyone's anticipating. And what happens is all the players are trying to accumulate size or cover their shorts all in the same spot. And that's what then, as we break out of this range, that's what leads to price expansion. Everyone trying to reposition at once. People are trying to buy shares, shorts are trying to cover, and then guess what? People are buying a shit ton of options, and you get this gamma feedback loop where people just need to buy as it goes up, and that's the beauty of what creates trends. And that's why, like, I'm spotting and looking for this stuff. In future videos and in future times, I will discuss how I find these tickers. I will discuss the filters I run to find them. But right now, I'm just trying to go into the logic of the chart. These Sunday sessions, which I hope to repeat, are really going to be about the nuances of the chart. So now, in more recent time, how do I view this? This was our really big leg. High volume, beautiful, beautiful, beautiful. Now, these 3 days, as of right now, we're in the counter trend, right? So I am still long biased, but it's okay to be short here, right? It's okay to be short here and trying to catch that counter trend, right? Because maybe this retraces 33%, which is probably about what we've retraced. Maybe this retraces 50%. Given the size of this overall move, that is a beautiful counter trend to catch. So a lot of people that follow my work know that I talk about being on the right side of the V. So this was the left side of the V. We break trend, and this is currently the right side of the V. So it's okay to be with the trend, meaning that counter trend of this overall move. So maybe we pull back to 60. The moving average is still, quite a bit away, so you definitely could see a pullback. So now here's the thing. I think anytime we see this stuff, you need to question was this potentially the big picture top? So Martin Shkreli, really, really smart dude. I question his ethics, but look, inarguably he's a smart, intellectual person. He is shorting the shit out of these quantums. He's trying to raise money to short the quantums. He personally believes this was the big picture top. So let's take that hypothesis and let's assess. So if you've seen some of my videos on trends, you know that most trends tend to end either due to breaking news. Most trends can end because they have a blow-off capitulatory top, like some big exchange in volume, or because sentiment just gets too hot. Or like some thesis gets dismissed. Oh wait, quantum computing isn't going to happen not only for 5 to 10 years, but it's going to be 20. Or wait, quantum computing will never happen. Or wait, we don't even need it anymore because ChatGPT solved every issue in our life. So Shkreli is calling for the top. Things are certainly euphoric. So I want to do a little scorecard in my head. So I'm always thinking, what are the different variables on each side? Okay, so let's start big picture with the market. With these Qs, we have covered a lot of ground this year. I mean, my God, like when you look at where we were in April, the Qs are literally up 50% since April. That is a crazy, crazy move. The intra-year volatility has been off the charts, right? We had this we went from highs to crashing to then not only just reclaiming highs, but we are already 10% higher than the prior highs. That is a pretty strong move. Like, I suspect most of the gains have probably been made for the year, but you never know. And like, would I say we are euphoric? I wouldn't say we're euphoric. Like, again, I would say we're a 7 out of 10. The overall market, the Qs, this chart is not crazy. This is not overextended by any means. The warning signs, I do think some of the warning signs are stuff like open. I do think stuff like this OKLO and these quantums being so strong is a little scary. Not extra innings scary, but definitely 7th inning scary. But now here's what's concerning to me. Stuff like this open really didn't have some blow off top. Like, this was not some crazy euphoric GameStop-esque blow off top. So I wouldn't necessarily assume that this open story is done. This OKLO, I think, is kind of the scariest one. This OKLO, this was the most blow off-esque so far of them. I do think it could be a long while for this to reclaim highs if it does. But again, we did not have some crazy volume mega capitulation. Like even IONQ, this was fairly steady. So my base case for now is that, okay, right now we're in the counter trend. A lot of these stocks are in the counter trend of a big picture breakout. I suspect most of them will hold up well at this point because, again, I don't think we had the signs of total euphoria. None of this volume was so crazy. We didn't have that super extended blow off top. We didn't have some broader piece of market news that dismisses this whole kernel of truth that AI, that nuclear, that quantum is going to change the world. So until that happens, I think you got to presume that, okay, big picture, we are still in a big picture long, and right now is just the counter trend. Again, every minute of every day, I am updating that thesis based on new information, new pieces of news, what the charts are doing. So that's how I'm thinking. So for now, like, I don't think you want to, if you're short this, I don't think you want to say, oh my God, this is going to $5. One of the questions I got was like, okay, if you think OKLO is going back to, sub $10, how do you prepare for that? In which my answer would be, I don't want to have that bias at all. I want to be open-minded, but I want to end up just always trading the chart. Because guess what? What if you thought it was dead here? What if you thought it was dead here? What if you thought it was dead here? We have these periods of consolidation, or you think the ticker's out of play, but look how many multiples we've gone up since then. Shorting is always such a dangerous game, especially in the really strong momentum markets. We are in a very strong momentum market. Any short I do, I am not thinking this is the death knell reaper has come, unless we get some mega blow off, right? So what am I looking in a mega blow off? GameStop. This GameStop move was the mega blow off. Yes, it's split adjusted. This, obviously it was way higher. That's fine. But this is what I need to see to know, oh my God, we're in extra innings and now like game over, everything. Like I want every last retail trader. I want every FOMOer. I want every YOLOer. I want every person to capitulate and say, oh my God, I am underperforming so much that I need to be buying bullshit. I need to buy OKLO at 140. I need to buy Open Table at $20, $30, $40. I need to buy quantum computing because, oh my God, IONQ, it's not even just going to $80 or 100. IONQ is going to 200. When every single person, I don't know about you guys, but nobody in my normal world has ever mentioned quantum computing to me. I don't think any normal people, any normies, for us elitists, us trader elitists that we know we are, I've not heard anybody talking about quantum computing names. I've not heard them talking about nuclear. It's a lot of just Wall Street bet YOLOers for now. So given that, my current thesis is, hey, we're just in the counter trend. So now let's see. What other tickers did I get submitted? Okay, so another thing that was discussed, Bitcoin. So I have tweeted about Bitcoin pretty extensively over the last, I don't know, couple months. Actually, I mean, especially since the breakout. So to give the TLDR, again, if you don't follow me on Twitter, please follow me on Twitter. Please subscribe to YouTube. So then, guess what? If everyone subscribes and follows me, I don't need to waste time recapping. I can give you more value quicker. So stuff to keep in mind. When this broke out, this was an amazing all-time high breakout after a really great kind of year-long consolidation. A lot of catalysts behind it, right? A pro-crypto government, a lot of less regulation. And guess what? We didn't go that far. We only had, this was the breakout day. We had 2 follow-through days. Then we consolidate and we kind of roll over back to that level. Uh-oh. Like that's, like when I see, so this is actually, take a step back. What I want to see in a breakout, is that trade immediately going in my favor. For those that follow my course, you know one of my favorite trading heuristics is the best trades don't look back and the best trades immediately go in your favor. Look what OKLO did. It breaks out and it's gone. Look what IONQ did. It breaks out and it's gone. Not just gone like, ooh, tee-hee, we went to 51, ooh, tee-hee, we went to 55.50. No, we go all the way to 75. So then you compare that to BTC, which was also a beautiful setup. We break out, right? We break out and then it's like, ooh, tee-hee, we can't go that far. A couple days of fun. You know, I had a couple days of everyone texting me, oh, happy new highs day to those who celebrate. Happy new highs day to those who celebrate, where immediately you're just like, God, shut the fuck up. And then, so I know Kyle Williams, if you're watching this, you're feeling personally attacked. I just want to say, no, this wasn't directed at you. This is directed at all of you. You and every Bitcoin maxi that thinks, acts, speaks, talks, and looks like you. This is a direct attack at who you are and kind of you being happy and reveling in your profits. But anywho, we then kind of dick around and go back lower. But no, guess what? We're back. We break out and then we fail again. And so this is not the price action you want to see of something that's really strong. You want to see it break out and push away from the level. You want to see it consolidate in that upper quartile like I was discussing. You don't want to see it pulling back. You don't want to see these failed breakouts. And so then, guess what? Failed breakout, and now we go even lower. So what really scares me in Bitcoin, my running hypothesis, again, this can change every minute or any single day, not trading advice, as I said in the beginning. So this, I worry, could be the false breakout, and then this is kind of the lower low. Was this the lower high? Then are we about to make another lower low? If this breaks 107,500 after some consolidation, man, that's a little bit worrisome. Like when the price action is kind of like this, I don't know that we're just going to magically start running off to the races. And it's so funny because the Bitcoin maxis, the bullishness is just so pervasive regardless of reality. When I post about Bitcoin, people are still saying 200K by year end. Look, anything can happen. I'm a trader. I'm open-minded. I will bet, I don't know, 8-to-1 odds that this is not going to 200K by year end. It just is not trading like that. It does not have that character right now of strength and relative strength. In fact, if this breaks down below these lows, like that is pretty concerning. Again, Bitcoin is super reflective. If you've not read some of my posts on this, I really think it's worth a read. So what happens all of a sudden when the people that are in Bitcoin expecting 10x, 100x, the $1 million Kathy Woods bullshit, total charlatan price target? What happens when in a raging bull market with rates getting cut, with gold exploding to the moon, that we can't go higher? That is concerning. So that's my take on BTC. So now ETH. ETH also had this amazing breakout. And it was so funny. So as part of my course, I do these monthly AMAs where I just take questions from the community. And when ETH was super dead all the way down here, I was like, oh my God, like if this reclaims, like Bitcoin was holding up, it was like, if this breaks this kind of downtrend, like where is this going to go? Where I didn't think it was going to go is I did not think it was going to go all the way back to highs this quickly. I did not expect this move at all. And then we so quickly broke out. So now here's the issue though. this 4,000 whatever breakout, this is a beautiful multi-year level. Normally, I would love buying the crap out of this, but I don't love that we had to come so far so quickly to go there. So this did have this momentum breakout, and it worked a little bit, but then we pulled back. Then we popped up again. So now, though, much like Bitcoin, Ethereum has definitely been taking some of the flows from Bitcoin, in my belief. Like, I think people recognize, oh my God, Bitcoin can't keep on going up 10x so readily, or even 1x so readily at this point. And so I think a lot of those people are rotating into ETH. So this has performed better. But now, like, this is also worrying that we're rolling over. This looked really nice as we perked up. As we have this kind of consolidation starting to hold the MA, then boom. That candle here, this is scary, this rollover. So my base case is that, like, look, could these roll over? Could these consolidate, then roll over further? That's kind of my base case. And so what you'll find, looking at a lot of these charts now, as we're on the 4th or 5th, like a lot of this stuff, it's made the leg. It hasn't blown off, but we're starting to be in no man's land and even consolidating and resolving lower. So I always want to type up a ton of charts and have a really good feel overall for, like, what's the hot stuff doing? If you traded 2021, the really hot tickers imploded first. It imploded first. You know, what would happen is, even if it didn't blow off, you would get them that would crack. They would try and reclaim. They would make some type of lower high, then it would roll over. Then the whole rest of the market kind of followed suit with the most euphoric names. So this ETH is kind of in, yeah, like big picture. You know, big picture, we're definitely overall bullish, but like the market structure in the nearer term is pretty concerning to me overall. So let me see what other tickers I had on my list. Okay, NVIDIA is a good one. So NVIDIA has obviously been the poster child of a lot of this. NVIDIA right now is holding up pretty okay, honestly. So so that being said, you want to know a super interesting nuance that I think is important. So NVIDIA had that big news on 9/22. We pretty much closed right near highs. I do think a very important tell for now is the fact that this NVIDIA did not follow through. NVIDIA is a name that normally has really strong overnight momentum. A lot of people will try and play this long overnight for the gap into all-time highs and follow-through momentum, and this failed. So that is interesting to me. So if you're a good trader, you're typing up all these tickers and you're observing these nuances. And that's why I felt it was important to do this session. So you can see in real time how my mind is processing these charts. And here's the other thing I will also emphasize. And I think this is a really funny point to make. So one of my absolute best friends in the world, he works for Jane Street Capital. Jane Street Capital, for those that don't know, is one of the absolute best firms in the world. Yeah, it's like Trillium and SMB and any day trading firm is total small fries compared to a firm like Jane Street Capital. Jane Street Capital, Citadel, Renaissance, like those are, you know, the firms that actually are running huge percents of overall market volume. Long story short, my buddy is super smart. He's working for the best, I mean, he's probably one of the smartest guys I know, working for one of the smartest firms in the world. And I asked him about like his experience, what it's been like. And one thing that stuck with me is he says, you know, you would be shocked how little we actually know. And I think part of the benefit of me doing this stream as well is for you to realize, like, I actually don't really know all that much. Anything I've said so far, I take a lot of painstaking care to be talking in probabilities, right? Like, I don't know what's going to happen. I don't know how this OKLO is going to resolve. I don't know if this was some big picture top. I don't know if this IONQ is going, you know, we're in the counter trend. I don't know if we're going to consolidate then resolve higher. I don't know what Open's going to do. I don't know what BTC is going to do. Oops. The truth is, I don't have a single clue what anything is going to do, and never in my career have I ever known. Like, a lot of people speak in certainty. I've never known a single play. Like, you want to know why I don't do like any alerts and live trading? Because I don't want people piggybacking my stuff, because I don't know. I want you to learn from me, I want you to learn how to see markets, and I want you to make your own independent decision based on the hard work and skill set you have built up so that you can, one, trade your own decisions and not rely on delayed decisions from me so you always get worse prices. But then two, like, it's not a sustainable skill set unless you learn and build a skill set. And ultimately, I don't know what's going to happen, right? I am just basing it on probabilities. I am basing it on patterns, and I'm basing it on 15 years of experience that probably encompasses 30,000 plus hours, maybe even disturbingly more, but I don't want to count because that would be sad. So like, I think in a really bullish market, this would have followed through. So I am just like, I have this constant, with any trade, I have this constant fight going on in my mind. It's the all the reasons to be bullish fight, and it's the all the reasons to be bearish fight. And I'm constantly dynamically updating the scales. And so one thing I talk about in some of my AMAs, this actually came up a couple weeks ago. I was discussing how on any trade, you almost want a rubric out of like 100. Right? And almost no trade's ever going to be 100, but the better that rubric is, I don't need every single factor to align. In an ideal world, right, if we take something like this OKLO, right, this is a decent consolidation, so I'm weighing the length of consolidation, I'm weighing the chart overall, I'm weighing the market strength, I'm weighing the volume, I'm weighing, did we have a news catalyst on the breakout? I love stuff with the news catalyst. And so I'm weighing all these factors. I'm coming up with the score between 1 and 100. Again, that's, not in the literal sense, but my point that like you need this rubric of pros and cons. And so I might say, oh, I wish this consolidated longer. I wish this had a news catalyst. But overall, it's still good enough and the market context is strong. So that says I want to be strong and aggressive and long. But that whole rubric, it's that battle between bullish and bearish, it's constantly being weighed, right? So I want us to see this really expand. I want this to be reclaimed when it shows weakness. So in even big picture, it's like, okay, in my head, I know BTC and Ethereum are rolling over. I know this NVIDIA kind of failed recently when this in other market contexts really, I don't know, it kind of should have gapped. I know that OKLO, IONQ, and the quantums are in this counter trend right now. So all of that I'm weighing as a tally. So that's a lot of how I'm thinking about this stuff. So NVIDIA, it's got kind of one strike against it, but in a market that's really bullish, I'm not going to take my eyes off this. Look, I got my whole watch list here, right? There's a lot of tickers in here. I got my quantum names. I got, my OKLO. I got I got SOUN, SCRV. I've got my Reddits. I've got my Palantirs, my tech names. So I'm always watching this stuff and seeing how stuff acts. So now let's maybe tackle one more ticker, then I'll look through the, oops. So let's look at gold. So gold was maybe one of my favorite breakouts this year, which is amazing because it's so boring normally. Gold has been absolutely on fire. We make this really big move and we've consolidated ever since then. We consolidate and then we break out in early September. But not only do we break out from this beautiful consolidation, where guess what? So this is what I would call the bouncy ball setup. Again, if you follow my stuff, if you followed the course, bouncy ball setup, really big leg. Then we make higher lows, higher lows, higher lows, higher lows up against kind of these highs. We then break out. The beauty of this breakout was we had a catalyst. And so this has continued to go. Gold has continued to be bullish. And like, look, we're not even having meaningful pullbacks. Like one thing I always pay attention to, this is another video that I talk a lot about in the course because it's actually, I might have a YouTube video coming up on this. I discuss why Fibonacci's are bullshit and how I use retracements instead, right? Super, super good stuff. So again, not a subscriber, click subscribe. That video, I think, on the Fibonacci's is coming out hopefully a couple weeks. And so this gold has not retraced at all, right? Like my base case assumption is you make a move. Base case assumption is 50% retracement. This can barely pull back, right? OKLO had a 50% pullback pretty much, right? If this is the leg, we pulled that 50%. So OKLO is a little concerning out of the tickers we've gone over. IONQ is still holding up in like the upper third. That's interesting. But this gold, right, is barely pulling back at all. So you do not want to, I don't want to short stuff that's showing zero ability to pull back. So this gold, if you're someone that swing trades this and you might be giving it to the moving average, guess what? Green lights all around. That is still going super, super solid. So now let me look at my list. So all I'm doing right now is pretty much looking at some of the course people throwing in their tickers. Okay, so APLT, this is a fun one. So Applied Therapeutics, this is a biotech. This got absolutely crushed. Again, so big picture, what am I doing? What am I doing is I'm looking at the big picture chart. So this stock, biotech, got absolutely crushed on data. So now this is some interesting stuff where it's like, I'll pay attention to this. And so this did massive, massive volume, right? This is a 2-year chart. This is the biggest volume in years, probably maybe the biggest volume ever done. And so this is one of those things where it's like, I don't need to understand biotechs. I don't need to understand anything. I'm just following the charts with this stuff. This was a really strong high volume move. This was a high volume or a very strong close. Again, we didn't close at 0.9. We didn't close at 1. We closed at like the upper 20%, maybe the upper decile of this range. That is really, really bullish. But, I want to make sure the next day, because we're so close to highs, I can just potentially give these highs as a level. And where can this go? Well, guess what? Big picture, I'd want to see, can we approach this gap down range? But then here's what I do. Anytime I see a chart like this, what I do is I'm then throwing a price alert. And so what happens is I end up having just endless alerts in for a zillion tickers. Like if you're typing up charts on the weekend, if I see something like this, if this gap down range is around like 240-ish, 250, I'm going to be setting an alert at 230. I want to see this at 220 or 230 just in case. It could be tomorrow. It could be 2 months from tomorrow or 2 years from tomorrow. I want to see if we can really set up and break out into this range. Again, what happens then is you've had so much share turnover where all of these people over this time are now in the money. So that's something I'm going to be watching. And again, can we just get follow through over those prior day highs? Where can this go to? We're clearly in price expansion. We've gone from 50 bucks to 50 cents to $1.25. There's no reason why this can't make a further move if it's sustaining the volume and showing strength. What else do I want to look at? So, this Intel, Intel's really perking up. And so here's the thing, right? We talk about the right side of the V. When I look at this daily chart, so we gapped up on news, right? And then we start to fade the news. This right here is the left side of the V. We break prior bar highs, then this becomes the right side of the V. And this is where you can trail that and use prior bar lows as the trail. And you have, right, if I buy here or something, break, those break of prior bar highs, I can risk less than $1 and catch a really nice move, right? So I view 25 to 32 as the gap on news. I view these 3 bars as the counter trend. This is an inside bar essentially. This is where we break trend. And now the trend is continuing higher. I am with the big picture overall trend. How far will this go? I don't know. I don't have price targets. I don't use price targets. I just let stuff trail. So this to me, do I want to buy this up here? No. The turn was up here. The breakout to highs was around here. This is too far. I don't have any view. If I'm long, I'm staying long to whatever my trailing stop is. I'm not shorting this by any means, but that's how I view some of these legs. And it's so important. I don't use price targets. I don't have strong views on anything. I'm just listening to the chart, right? You want to know what I'm also not doing? I'm not dissecting the news. I'm not being an analyst. I am just trading the chart. And so that's why I find these sessions so valuable to you all. And again, I don't know what's going to happen. I've never known in my life. I'm just simply listening to the chart to always be with the trend, right? If you've seen that one Trader Lion video, the trend is your friend. I always want to be with the trend up, the counter trend, in a bigger picture trend, or once that counter trend continues to the overall trend, I'm just surfing the trends, right? And if I can capture enough of a bone that, risk reward and probabilities give me positive expected value, that's the name of the game. I don't know if this is going to go back to 29. I don't know if it's going to go to 40. I don't need to know. I'm just riding the wave of all the other price action that's told through the technicals. Another fun ticker. let's see, this RBLX. So, I mean, so even stuff like this RBLX, like this was one of those stickers that had the big gap ups, hard fail. I think there were a couple names that failed hard this day. So right now we're just in no man's land. So this is just mid-range for me. I just want to see us consolidate. And again, going back to those price alerts, I'm just setting a price alert at, call it, 148. Wake me up at 148 or wake me up at, call it 112. So a lot of what I'm doing is I'm just using my eyeball to find the range. Right now, this range is, call it, 110-ish to 150-ish. We're in the middle of it. We're smack dab in the middle. Guess what? When I see no man's land, no touchy. I don't want to touch. So many traders, they just chop and churn themselves and do 1,000 paper cuts in no man's land. And yeah, I might catch this one move, but guess what? Most traders in the aggregate are just doing 1,000 paper cuts. They're break even or worse. Most of your big gains do not happen in no man's land. Your big gains happen when you are breaking out of ranges. Your big gains happen when you are breaking out of ranges. Your big gains happen when you are breaking out of ranges. Nobody on earth is fucking crushing some bullshit in here. Nobody is crushing bullshit in here. Where people are crushing is the breakouts out of the ranges. So again, the lesson here with some of this stuff is I'm identifying the ranges. I'm setting the alerts. Okay, so the final sector, I think, okay. Oh, wait, I almost forgot Tesla. So this one has been, oh my God, how did I almost forget Tesla? Shame on me. So again, like peak sentiment, really, really shitty, Armageddon, everyone's burning Teslas in the streets. Probably a good time to buy versus otherwise. And so here we have this nice consolidation. Oh my God, Trump and Elon are feuding. Oh my God, Trump and Elon are feuding. Oh my God, Trump and Elon are feuding. But they all recover. And what happens is, again, lows, higher lows, higher lows, higher lows, higher lows. This consolidation here is really telling. What was, oh God, what chart was I looking at before? But remember I highlighted that little patch. I think it was maybe IONQ. Hold on a sec. Yeah, okay. The same way IONQ had this little patch here, then this is like the perky, better pay attention bar. Then this is another perky, better pay attention bar. So in Tesla, these 3-4 bars here are we're consolidating tight. This is the perky, better pay attention. Oh my God, this could go. Then that's the breakout. Then, of course, we know the Elon share purchase, which I think is just Elon pure big dicking with Larry Ellison. Oh, Larry Ellison, you think you can be, one of the richest people in the world? Okay, fuck you, Larry Ellison. I'm going to buy my stock and pop the stock higher. Because when you are one of the richest people in the world, those are the type of games you play because you care. Hey, I wish I was that rich, and I never will be, sadly. Well, not really. I don't care that much. So anywho, this gaps up. So this, again, this consolidation is amazing, amazing, amazing. So a lot of traders, swing traders, will be swinging this long with a stop. Then, of course, again, I have my alerts. I need to know what the all-time highs are. So I am watching this. Anything above even 475, 480. Like Tesla is one of those red alert stocks. This has made some of the most epic breakouts ever. If you don't know what I'm talking about, again, this is your homework assignment. Go back in Tesla and study all the epic breakouts. Before the reverse split, this had the most epic $900 breakout of all time. Please go back and study these charts. That is a homework you need to be doing. That is the other stuff you need to do with your other time on this beautiful, wonderful Sunday before you go out and enjoy football and pizza and wings and whatever you do. So I'm definitely, right, this is just long city. Now notice what's interesting. None of these stocks we've looked at today have really necessarily been a screaming short. Maybe there's a little counter trend play, but all the price action in everything is resolving higher. That is an important takeaway. So one of the questions one of my users asked was like, how do I think about the Tesla Elon Musk share purchase? And the truth is, I really don't. Like, I try not to be an analyst. All I know is that was news. I view it as pretty binary. That's positive for the stock. That's positive for sentiment. And then I just listen to the price action. And all of this, that's a bullish breakout, bullish consolidation. This even on Friday was super, super resilient. So all of this is just screaming continuation, honestly. Then the other hot sector, which might be my last kind of rant, cure. This was what, the Huntington's disease, if I'm not mistaken. Again, big, I guess, as the Qual Maggie fanboys would say, episodic pivot. All of a sudden, hey, this drug might help Huntington's, not cure, but help Huntington's, extend the life and quality of life of Huntington's patients. Huge volume, huge gap up, and actually Strelly thinks this is going to just keep going. And hey, he's not an idiot. I don't think he's a genius on everything, but hey, it's fun to pay attention. Meanwhile, holding prior bar lows, this is a really big move, but I'm definitely watching this stuff. And then the other stocks that were moving with it, I think it was the CLPT is moving with it. The this LAC was the lithium stock that has the government stake. So all this stuff, like when we have news, I'm just watching for like, how will this consolidate and resolve, right? Like, I don't want to chase stuff up here. I don't want to necessarily chase stuff up here, but after a big move, it's like, let me see how this consolidates. Let me set my alerts at all of the ranges. And that's how I kind of think about this stuff. One final ticker, Palantir, this had a pretty steep reversal. So I'm going to, again, I have my alerts in, 140 by 190, and I'm just watching this stuff. This to me definitely needs consolidation. It's hard to imagine Palantir dying too hard right now. And that's why this was a really interesting play for me, which I discussed, again, so people, not that I want to get full sales pitchy, but I do have my trading course, and each month, if you're enjoying this stuff that we're dissecting and we're looking at here, this is the stuff I do in the AMA, where I take every user's questions. Maybe I'll be able to take a few right now. We're already stretching almost an hour. I am a very good rambler, I guess, on stocks. But I dissect plays like this in very high detail. I discussed why I view, I don't think most traders were so interested in this, where I felt that this, for me, was one of my best plays of the year and was highly appealing to me. And I discuss this stuff in detail. So if you like this stuff, be open-minded to the course. And guess what? You don't have the money? Great. I am doing all this stuff free on YouTube, on Twitter. So if you enjoy this stuff, make sure you give a subscribe, make sure you give a follow. I'm going to try and do this weekly, at least for the time being, to give people an idea of kind of the content I put out and build up these databases. Because again, studying these charts, in my view, like these nuances and doing these deep dives, all this was 1 hour on a Sunday. Think about how much stuff we covered today. We covered so many tickers. We covered sentiment. We covered the right side of the V. We covered how to structure swing trades. We covered what market tops look like, how to judge market context, how to judge the nuances of these consolidations. That was 1 hour of our time. Think about what happens if you were to spend 2 hours. I know a lot of people are like, Lance, this is my day with family. This is my day with church. This is my day with whatever. Guess what? Do it on Saturday. It's just for example's sake, right? And so these 2 hours, again, do another hour after the session. Think about how much you have learned. Think about how much that compounds over time. Again, I spent 10 years doing this. If I was on vacation, if I had a trip, if I had, a Bears football game, I would go to the football game. I would live my life, right? But I would say 80% of the time, 90% of the time, I was in that office. I ordered some nice, so when I was in New York, I would order some nice New York style pizza, and I'd be crushing New York style pizza. I would have the Jets on losing, getting their ass kicked. I would be watching, Mark Sanchez's butt fumble back in the day. No, that might have been before Trillium Days, but I'd be sitting there with pizza and a beer or something, and just studying charts, reviewing my week, watching tape. The other great work to do on a Sunday is what I call the highlight reel. That's where you record your screens in the top moments. You slice and dice to highlight the best moments from the week. I would rewatch that. Okay, guess what? The Bears game is on halftime or whatever. Okay, let me watch some tape. And guess what? If you can then do this with other people in your trading pod, if you can build community, that is when all of this gets really, really fun. Me, I'm enjoying this session. I know it's helping you all. I'm having fun reviewing this. I'm learning. I'm studying. I'm getting prepared for the week. I'm helping. Right now on the stream, there's 3,000 people. I am helping 3,000 people review in a highly time-efficient manner. That is amazing. This is all just in 1 hour. So I highly recommend this as a best practice. I will now take a very short couple of questions. I've not been able to keep up with the chat at all. So if anybody wants to be the 1 or 2 questions I take, feel free to throw it in now. And again, my final ask, Guys, I'm taking my time on a Sunday. If you enjoy this, please give a subscribe. My number one priority, I'm not here to sell you on the course. If you want the course, great. But right now I'm trying to build up YouTube. I'm going to be doing this weekly. Check out the subscription, subscribe or whatever. So one question, Spectre Group. As a new options trader, what is your favorite ticker to play options on? So I love that question. Why? Because I do not have a favorite ticker. I am always trying to stay unbiased. Just because one ticker was good and in play does not mean I will stick with that ticker. So I really want to be moving to the broken slot machine. When OKLO is setting up, I want to be trading OKLO calls. When IONQ is breaking out, I want to be trading IONQ calls. Even in gold, you can do futures on options, or you can just do GLD. So this is the type of stuff I am doing. I am not sticking to one ticker. So I am not biased like that. One question, do I use RSI? No, I do not. Very good question for Farouk, and I have an awesome course video on this actually. Am I waiting for the bar to close? I have a very hysterical video stating that I do not wait for the bar to close. I also joke and play with Qualamagi on this one, so no, I don't. Qualamagi does it differently, and that's the beauty. On something as simple as waiting for the bar to close or not, I totally differ from Qualamagi's view, and he's a great trader, and I'm a good trader too, and that's the beauty of markets. Have I ever seen a profitable ES/NQ only trader? Yes, but I do think it's way harder. I do think ES and NQ are more efficient. Oddly enough, and so look, I'm very curious, are there any of those funded trader or just ES, NQ futures traders that will be in the next Market Wizards? I know people are making money on these funded trader programs. I have friends that are making money on them, but I don't know of any really, really big trader that's actually doing this for size and scale over time, which is kind of a little scary to me. So let's see. Do I feel OKLO on the 85 break? Do I feel after 3 straight days it's getting late? Definitely I don't want to chase some of this stuff too hard, but this is such a big level that no, this isn't, where I feel we're getting long in the tooth is this day. This is the long in the tooth day. This is just price acceptance. We're starting to expand. And this breakout is such a good level that this can really go. It's not shocking to me that this did what it did, but this is, 130 plus, that's when you start to say, uh-oh, I'm a little scared. How do you form your stock watch list? So that is a great question. I will likely do a future webinar. If I do webinars in the future, the number one topic I want to speak on is what is an in-play stock and how to find them. So that will be the subject of a different live for a different day. Can anyone win? Is trading one of these disciplines where people keep it simple? So next week, I have a surprise critique video that discusses exactly this question. Can you win with simple systems versus those who overthink? My take is going to be awesome, and it's going to also critique one of the top, YouTubers in the space. And my short answer is yes, with qualifications, and those qualifications really matter. But check out the video. I think it's coming out this week. I'm starting to also lose my voice from all this talking, so I'm not going to go so crazy here. Couple more questions. How many trading samples is okay to add to your playbook? So first, and that's a great question, first just start to document these trades in Evernote and stuff. Build up maybe 20, 30 plus examples, start to back test, then just start to trade in demo, then start to trade small size. Do not put meaningful risk until you know you have positive expected value. How important is fundamental analysis for momentum trading? So I did a tweet on this at some point. Obviously the more signs you can get to align, I want the fundamentals with me ideally, but look at the quantum names. The quantum names in OKLO, fundamentally they're dog shit. They have no earnings whatsoever. It's just a huge guess when this happens, what the cash flows will be. So it's not that important to me. I'm not a fundamental analyst, I'm a trader. One question, what do I think about giving a discount on the course? I don't know if I'm necessarily going to do too many discounts anymore. We're trying to up the value offering. I'm trying to I'm trying to find out, can we implement daily watch? We already have daily watch lists, but can I do more proactive videos? How can I factor in a type of mentorship for the individual? Like, how can I give each individual feedback? And if I increase those value offerings, I don't know if I'm necessarily going to be able to do discounts. So I don't know. Stay tuned. So quick question, MSTR related to Bitcoin. MSTR, I've long felt that this was a blow off top, and I've long felt it's unlikely we reclaim these highs, and it's been relatively weak to Bitcoin. And when Bitcoin made highs and continued, and this couldn't do anything, that was super bearish. So big picture, I think this will compress versus Bitcoin, but of course that can change any second. Okay, now I'm gonna do one more question. My voice is definitely starting to hurt. Let's see. Luke Humphrey, do I use CVD and order flow for scalping? Is it weird to use Grok for journal? So I will use the level 2 and the tape and reading the tape for scalping. Is it weird to use Grok to journal? No, I think do whatever makes sense to you. I use Evernote. I've used Evernote for a long time. Some people use Notion. The most important thing is that I know people that don't even journal in the traditional sense. They just review the charts and their trades enough that it's up in their head. Like, there's no right way. I tend to be more systematic about it. But look, do what is right for you. And that's why I always talk about, like, learn from me, but make it your own. We do not learn the same way. We do not have the same experiences. We do not have the same goals. Your goal is not to be Lance the trader. Your goal is to be your best self, learning, hopefully a little bit from Lance. Final question, because I think this is just a fun one from Fred B. What is my superpower? If I had to describe one superpower that allowed me to get to where I am at the level of trading I reached, I would say I had a very powerful why. You see me tweet about this. You see me talk about this. I ran a trading office for many, many years. I have hired and recruited traders, classes of traders. I have trained over 50 plus traders, like literally direct mentorship under me for years. I think the big differentiator is the people that find success and persevere, they have the really strong why. And here's why I think some people just won't make it. Like, you cannot force yourself to have a strong why. Like, if you just don't have it, if you don't have that powerful internal reason driving you, and look, for me, a lot of that was money. I grew up not having much money. My parents struggled, and I did not want to struggle. And especially, I was in college during 2008. I was living right outside New York City during, that financial crisis was not fun for most people in New York City. So I saw struggle. My family struggled, and I do not want to live that way. And so I worked my ass off in college. Like, in high school, I was smart, but I was a little bit of a class clown. But in college, it was like, okay, this is real. I had to tutor. I was working part-time. I still got essentially a 4.0. I graduated, I think, 3rd or 4th out of, I don't know, a couple thousand people in a top business school because I knew I need the best job I can get. When I got to Trillium, I didn't know if I could make it. I had one thought coming into it. I don't know if I'm going to win. I don't know if I'm going to succeed, but I will outwork all these motherfuckers. Like, that is the one thing I can control, and that is the one thing I can guarantee. Nobody is going to outwork me. And I was in that office every single Sunday for 10 years. On bad days, I felt like shit. I was frustrated, and I just kept working. I would do my full work day. I would review. I would then go to the gym. I would pick up. I had no money. Like, you can't understand how no money I had, right? I had student loans. My salary was $500 a week. I had student loans. I had rent. I had, all this other stuff to pay for. So I was living super cheap. I would go to the supermarket. I would get one of their shitty prepared meals for $4 or $5. I would get Subway. I would do the $5 footlong. I would have half for lunch. I would have half for dinner. And that was the shitty food I was eating. And I would just study and study and study. And guess what? Living like that sucks. And a lot of people have to live like that, but it makes you hungry. It makes you more competitive. It makes you fierce, right? And so I saw the money my boss was making. I saw my boss. When I was sitting there fucking eating Subway subs every day, I would see my boss make $100,000 plus in a trade. You want motivation? The motivation is, oh my God, my boss in one trade just made take home after tax more than my family makes in a year. And so you want to know what you do when you see that? You shut the fuck up, you eat your Subway sandwich, and you get to work. And all you do is work because you know you want that life. He never had to worry about money, and I did not want to worry about money. And most traders, they don't come from that background. A lot of people, they're like, ooh, tee-hee, trading seems cool, YOLOs, Wall Street bets, but it was no. I will be the fiercest competitor at this firm because I want this. I want to be that trader that makes it into the top 10. I want to be making that award. I want to be up on that stage. I want to be able to go on that nice vacation. I want to be able to not worry about, my Friday splurge. On a Friday after a hard week of work, I would go get sushi, I would get 2 rolls and a beer, and I would spend $15, and that was my splurge. And I wanted the nice meals. And the beauty of it, of being in places like New York City, we would do these work dinners. So once a quarter, we would go to one of the nicest restaurants in New York City. We would go to a Michelin star restaurant. We would go to a Del Frisco's. And we would have the most amazing, delicious meal. My buddy and I, we would talk about it for weeks going up to the meal. You would eat at Morimoto's or some star chef. You would have Toro. You would spend pretty much your week's salary in one meal as part of the stipend. And it was amazing. You're with your friends, you're relaxing a little bit, you're working so hard. And you would have this experience and you would say, wow, like this exists out there. I want to be able to go out with my friends. I want to be able to experience this. I want to be able to have that level of success where I don't need to worry about my $15 sushi bill being too much. And so that was my powerful why. Some people, they love the game. They love trading. They love the challenge. They love the scoreboard. Like, there's many reasons, and they're not just black or white, right? Like, obviously I wanted, multiple reasons. I love the challenge. I was every day I was excited. Can I improve? I love tinkering. I love incremental improvement. I love really diving deep to see how far can you take something. So it's multiple whys, but that for me was one of those things where it's like, that is why I want to be good at this game. And so I think the thing that separates people, it's like, I don't care what drives you. All I care is that what drives you is very, very strong. So that for me is the separation of what really leads people to success, because this is a hard, difficult job. It is insanely difficult. But those people that persevere, it is that powerful why. So now my voice is really fading. I get it. It's Sunday. I believe there's already a football game on. I have not even checked the score. So all of you, thank you for attending. Thank you for the support. I am sending love to everyone. We're going to keep on piling out the good stuff on YouTube, on Twitter, expanding the course. So thank you all for the wonderful Sunday. I hope you all have a wonderful day. Keep studying hard. Bye, friends.